Selling your business may be one of the most important personal and financial events of your lifetime. Careful planning is required as the decisions you make or fail to make can impact the attractiveness of your company to prospective buyers and limit your ability to maximize on your investment and valuable tax saving. Are you ready? Is your company ready? To answer this, you need to see the whole picture. We are a unique collaboration of 4 leading global advisors. Working together, we can help you put all the pieces in place and make sure nothing is overlooked. We are Exit Plus. Hi, I'm Shanaz Nasser with Dentons, and I'm delighted to be joined from New York by Eric Gelb at PKF O'Connor Davis, from London by Chris Rose at Dentons, from Amsterdam by Mark Carmichael at STS Capital Partners, and from Washington by Chris Opie at Bernstein Private Wealth Management. In this episode of the Ask Exit Plus series, we will look at ways to identify your theoretical best buyer and the impact it has on the sale process. Mark, what are the kind of buyers one should be looking at, and in your opinion, what are the pros and cons for each one?
Shanaz, that's a big topic. I think we could spend a lot of time on this question alone, as there's a lot to unpack here. But generally speaking, you can categorize buyer groups into really 3 main categories: strategic buyers, financial buyers, and let's say management-led buyouts. But my time is short here, so let me focus on the main 2, the strategics and the financials. Strategic buyers are most often another business which operates or has expertise in your company's market or industry. And it could be a supplier or a competitor or a customer or simply another company within the same vertical industry looking to expand its offerings or its geographical footprint. Financial buyers, they take a different view to strategics in that their interest is primarily the return on investment that they can realize from acquiring your company. Private equity groups are the most common financial investors, and they're interested in the cash flow that's generated by your business and the future exit opportunities from that business. So they look to improve your company's cash flows by boosting things like revenue, cutting costs, creating economies of scale by buying and bolting on similar companies to yours. And they are usually very sophisticated in their process and can move quite quickly. However, they may not always achieve the same valuations as strategics. Historically, strategics have paid higher valuations across the board because they can often identify synergies between the 2 businesses that can be achieved in the long term. And they're often larger companies with better resources and often have established access to more funding than financial buyers. That's how I would summarize the 2 main groups.
Well, Mark, given you talked about those 2 groups, let me just touch upon management buyouts for a moment, just because a lot of our sellers will consider this. I think that you can treat them in many ways like you would a financial buyer, because they will often be tied up with a private equity sponsor in more cases than not. And I think the one issue you should look at very closely is whether in an auction process, because someone like Mark will be looking to maximize value through competitive tension in this competitive situation. Do you not let your management bid in this process, and what conflicts arise there? And I've seen some challenges where you have the same people who are talking to potential third-party bidders as who are bidding for the asset themselves. And so you need to take that into account, and it's usually your financial advisor will help balance that tension.
Terrific, Chris. Thank you. So what we see a lot of times with strategics, I would agree with my colleagues here, there seems to be more of a spirit of collaboration and cooperation on a strategic, because the management teams of both companies are working together to increase the business's revenue and profitability. So I would say that's one of the pros of a strategic buyer. On the financial buyer side, one of the things we see sometimes is pressure. So they are, as you were saying, often the investment comes from a private equity or venture capital fund, and therefore that stresses, or there's a higher emphasis on getting a return, a positive return on investment in 3, 5, 7 years, and then doing an exit. So, if the sellers want to preserve a legacy or have their business continue in largely the same form that it was, that could put some question marks on a financial buyer exit. As far as the management buyouts, what we see is typically the senior management in a privately held company has been in those seats for a long time. So we see the most continuity in the new organization, and that oftentimes can be the most efficient way to make an orderly transition.
Thanks, Eric. I mean, I'll just add from my perspective, I think that you can maximize the number of potential ideal buyers by understanding what your limitations are. And so by quantifying what you need to get out of a deal, hopefully it level sets at your end, at the seller's end, such that you're ready to receive as many numbers of potential partners offers as possible. I'll also latch on to something that Mark said about geographical expansion, right? In Bernstein's global families practice, we're often dealing with entrepreneurs who either have family overseas in a third country or who have expanded their business across borders. And sometimes they've gone to the new market that the business has expanded into, in particular where that's the United States. And from that arises a lot of additional complications, both tax and regulatory, but also occasionally cultural. And I think that in thinking through your best buyer, ultimately, it's somebody who you have a shared understanding and ideally a basis of trust with, so that you can get through the deal process with as minimal stress and difficulty as possible, recognizing that it's always a challenge.
Thank you, Chris. Some valuable insights from the team shared here today. Here are the 3 things to be thinking about going forward. Understand your limitations. This will help you to maximize the number of potential ideal buyers. Expand your thinking to cross-border geographic expansion, perhaps where family reside or are planning to reside. And lastly, the best buyer ultimately is someone who you have a shared understanding with and trust. Thank you for joining us. Bye. How exit ready are you in your business? Find out using our free exit readiness assessment. Simply complete our confidential online survey, which should take you no more than 10 minutes, and we'll prepare and send you your personalized report together with your readiness score. Visit www.dentonsexitplus.com for more information.